Hi there, welcome to Kneppy Invest. Sometimes you just want a company to succeed, even if you're not a shareholder, because of what they're doing. And if they succeed in whatever they're doing, they will benefit humanity. And that's definitely for the company I'll be featuring in this video, Volpara Health Technologies. I'll talk about what they do in the next slide. But in this video, I'll be looking at Volpara's September Quarter Appendix 4C, just to see how they are progressing on their path to being successful. And I do believe we can have a little bit more confidence that this company will become successful if they do become operational cash flow positive. They haven't quite got there just yet, but signs are looking good. Now, one of the other reasons I am following this company, apart from what they do, is the share price has been dropping over the past year, and the company has becoming a little bit more and more attractive as share price falls a little bit further. So I have put Volpara on my watch list. In fact, it's been there for a while, but I am paying closer attention to how the company has been performing financially. So I'll be looking at their Appendix 4Cs a little bit closer, and I'll be following their movement of the share price a little bit closer as well for a potential position in the future. So let's get stuck into it and talk about what Volpara exactly does and why I hope they succeed. The major reason I want Volpara to succeed is because they have developed a breast cancer detection software. And anything, whether it be technology, software, anything that can limit the effectiveness of cancer cannot be a bad thing. If you want to argue with me, I think you would lose. And hopefully one day, our descendants well into the future, 100, 200 years, will look back at us and see the word cancer and be thankful they don't have to deal with that in their own lives. Volpara was founded in 2009, and one of the founders of Volpara was Ralph Highnam, who is now the CEO. And one of the reasons he founded this company was because breast cancer had a significant impact on his life, and he just wanted to beat breast cancer. Now, Volpara is a New Zealand-based company, originally out of Wellington. So they were founded in 2009 and then ASX listed in April 2016. And there is a bit of skin in the game. The CEO, Ralph Highnam, has 6.5% stake. And another of the directors, I think he's a non-executive director, last name Allen, first name I forget now, has about a 7.5% stake. So there is a fair bit of skin in the game with some of the directors in this company. And the largest shareholder in Volpara is Harbour Asset Management. I have a feeling they might be New Zealand-based as well, because a lot of their other holdings are New Zealand-based companies, and they have 10.2% holding in this company. The market cap of Volpara at $1.11 is $280 million. Does seem like the market is hopeful this company will succeed, or expects this company to succeed, and the ticker code of Volpara is VHT. Before we have a look at Volpara's Appendix 4C for the September quarter, which is their second quarter because they are a New Zealand-based company, just going to have a look at their financial state. How are they performing in regards to revenue, profitability, operating cash flow, and all that jazz. So we'll be looking at their financial year 21 numbers, just compare it to financial year 20. Volpara is a growing company. They grew revenue from 12.6 million New Zealand dollars to $19.8 million as well. So that's a 50% rise in revenue in the past year. So this company is growing. Gross margins have increased from 86% to 91%. You might be saying that's fairly high, but remember, this is a software company. And the way to view Volpara is through the SaaS lens. And that's another reason why a valuation or market cap of about $280 million does or might not seem too high. But when you do look at the profitability and the cash flow state of this company, it does seem fairly low. So operating cash flow negative $14 million in financial year 21 and loss making by $17.5 million in the same year. So this company does bleed a lot of cash. They have made some acquisitions over the past few years, so we will see this company do capital raisings. At the end of the financial year 21, they did have $30 million of cash, and the annual recurring revenue was $29 million at the end of the September quarter, not the financial year, and that was up $1.2 million quarter on quarter. If I take that number of annual recurring revenue, 29 million, times it by 10, you get a rough idea of the valuation or good valuation of a company. So that gives us 290 million, which is very similar to the current market cap. But you also got to take into account the growth rate of annual recurring revenue. And increasing 1.2 million quarter on quarter doesn't seem too much. So it wouldn't surprise me to see the valuation come back a little bit based off the annual recurring revenue and the growth rate of annual recurring revenue and the valuation right now. Price to sales ratio, 14.1. So at this point in time, I can't really say Volpara is cheap or expensive based off a lot of these numbers. I would prefer Volpara not to be as operational cash flow negative and unprofitable, but it does seem like they are spending to grow in the future. So I wouldn't be surprised to see more capital raisings to maintain cash coming into the business. But at some point in the future, this company will have to become operational cash flow positive and profitable to justify the valuation. I'm not sure when that's going to be, but at some point in time, the market will expect that. It already does expect that. Let's go back 1 year to look at the September quarter in 2020, just to see how the company was performing at that point. And then we'll look at the September quarter 2021 results and just compare the two to see how Volpara has been performing over the past year. Receipts to customers 1 year ago, 4.7 million, and Volpara was operational cash flow negative for the 1 quarter of 3.5 million. But they had a lot of cash at this point in time. In fact, they had $64.3 million of cash, but they did make an acquisition, and because of that acquisition, that cash on hand will drop a fair bit over the next year. So let's have a look at the most recent Appendix 4C, just to see if Volpara have grown over the past year. Well, Volpara have grown over the past year. In fact, cash receipts have increased from 4.6 million to 7.1 million. That's an increase of 2.5 million. But they've also increased a lot of their costs as well. For instance, research and development up 300,000, product manufacturing operating costs up 700,000, staff costs up 500,000, and administration costs up 200,000. So the increase in receipts over the past year sort of almost balances to the increase in costs. Not quite. Receipts have grown a little bit quicker than the costs. So because receipts have grown a little bit quicker than costs, Volpara is not quite as operational cash flow negative as they were 1 year ago, but it's still operational cash flow negative by $3 million for the quarter. Because of the acquisition they did make, cash on hand has decreased quite significantly from 1 year ago, and right now is at $25 million. Now, if they don't make any more acquisitions, that amount of cash on hand will be able to sustain their operations for the next 8 quarters or 2 years, unless they really ramp up their costs, which means they'll need to do a capital raising sooner than later, or if cash receipts start really growing at a much greater rate than cost, maybe they would have to do any capital raisings at all unless they do acquisitions. And all my eyes on how receipts grow over the next few quarters. So we have seen receipts for this quarter and the quarter 1 year ago, but how have cash receipts grown through time? This is something I always have a look at for any company that does release their Appendix 4C or even half-yearly and yearly reports. So let's have a look at that right now. Ideally, for me personally, I like to see companies increase their cash receipts through time. I want to see an upwards trend, because if a company can't increase their cash receipts or their revenue, then how are they going to increase their profits unless they decrease costs? But decreasing costs is not something a company can do for an infinite amount of time. So I want to see a company grow through receipts. And if I don't see a company growing their receipts, for me, that is not an investable company. Now, sometimes I will invest in a company where I don't see receipts growing, but my expectations are that receipts will grow in the future. For Volpara, we have seen receipts growing through time. Now, some of this increase in receipts can be attributable to some acquisitions, particularly in 2019. We saw receipts grow from $1 million to $4.9 million over 2 quarters. Some of that could have been because of an acquisition, but generally, receipts have been growing through time. Certain periods here, you'll see receipts go sideways. We saw that between the September quarter 2019 and the December quarter 2020. Receipts just went sideways. But over the past 3 quarters, we have seen receipts grow from 4.6 million to 7.1 million. So the momentum is right there with receipts, and hopefully this can continue over the next few quarters. Finally, looking at some charts for Volpara. The first chart we'll look at is the weekly chart since they listed. And then in the next slide, I'm going to look at the daily chart. And I'd just like to look at different time frames for companies. The weekly chart, I like to look at this for potential long-term buys. And when I look at the daily chart, that just gives me potential buy-in prices. And there is a potential buy-in price for Volpara, sort of a lower risk buy-in price. And I'll talk about that in the next slide. But Volpara's share price has generally increased since they listed. Share price back then was around the 40 cents level. We have seen share price get as low as 30 cents twice back in 2016 and 17. But from 2017 or the middle of 2017 to the end of 2019, share price of this company had been in a well-defined uptrend. In fact, it increased from about 30 cents to a high of about $2.15. So good times for shareholders during that period. Also during that period, very important that we also saw a volume grow through that time. So there was a lot of interest in this company during that period. The share price was increasing. But ever since the COVID-19 financial panic, we have seen share price of Volpara under pressure. In fact, during the COVID-19 financial panic, share price fell as low as about 80 cents. And even though we did see a rapid recovery in the share price over the following weeks from the low, which would have been March 23rd, share price has not really recovered because right now the share price is at $1.10 and definitely under a bit of pressure just by looking at the chart. The other thing you'll notice if you focus on volume, when the share price was increasing from 2017 to the end of 2019, we saw volume increase with it. But over the past 2 years since COVID-19 financial panic, we're actually seeing a volume drop, which means the market is becoming less and less interested in this company. And the one thing I'd want to see to take a position, a confident position, a high conviction position, maybe you could call it, is for Volpara to release a good financial report and volume to start increasing. That would tell me the market is becoming interested in this company. Now let's have a look at the daily chart. I'll just show you my potential buy-in price for this company. If we look at the daily chart for Volpara, going back about 15, 16 months since June 2020, nothing too exciting happening here with Volpara. Share price is generally going down at a slow rate. That's because the market has become less interested in this company, less institutions or fund managers buying into this company. We did see interesting action in June and then in August when the share price got down to about $1.05. When it hit $1.05 in June, we did see an increase in volume. So there was someone in the market getting a little bit excited because the share price had reached what they might think is a bottom. And when the share price got back to $1.05 in August, even though volume didn't increase, we saw the share price bounce off that. And over the past few weeks, we have seen the share price fall from about $1.30 all the way back to $1.10. And it might want to test $1.05 again. And that is a low risk buying price, $1.05 or just above that, because if the share price falls through $1.05, which is a support level on strength, that's an immediate sell, because that would confirm that that support level has now become resistance, particularly if it stays below that support level now for a while. So if you are interested in this company and you are thinking about taking a long-term buy, the more this falls, the better for you, because then you can buy more shares in this company. But if you're looking for maybe a short-term trade, $1.05 could be that, and then we might see a bounce off it, just like we've seen the last 2 times it hits that level. That's all I have for this September Quarter Appendix 4C video for Volpara. Hopefully this company does succeed in their breast cancer detection software, and if they do succeed, hopefully the rates of breast cancer deaths around the world falls dramatically. If you do have any questions about this company or any other company on the ASX, please leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.